Hi everyone, my name is Vendik and you are welcome to the channel. Today we will be talking about liquidity. The main purpose of this video is for you to know what is liquidity. All right. Uh, they try to make it a little bit complicated, but we'll try as much as possible for you to just know the facts. So if you know what is liquidity, you will know how to identify it in the market. So this will really help us as we are proceeding in explaining our strategy and how we are going to implement it. All right. So without further ado, let's get to the video. So liquidity. The question is, what is liquidity? Let's take for example. Okay, let's say you have these products to sell. All right. Then you have them in, let me say, 3 to 4 thousand pieces, and you want to sell it in one day. All right. You will go to a store where they are buying this product in bulk. All right. So that process of you going to that store is a liquidity zone. If you go there, you will sell everything and collect your money in bulk. All right. So that particular point, that place you are going is a liquidity zone. So market will actually tend to go to a liquidity zone. All right. I don't know if that's explaining, but if you have bulk of product to sell, you will need bulk of buyers. All right. Okay, so this is how liquidity works. You have product to sell, all right, but the person that is to sell it to you, all right, is buying it to sell it to you. So as he's buying it, he needs to get to your price tag before you are able to buy it off. So there's something people call big guys in the market that have a order placed at some certain level. Okay. So those certain levels are where the orders are in bulk. So there is a difference between liquidity and then order block. It seems the same thing, but they are not the same thing. All right. So I will explain in the chat how liquidity really works. Okay. There is an order block and there's a liquidity. All right. So every order block has liquidity. So let's say it's almost the same thing, but the difference is that in liquidity, it always tends to 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 go above order block, all right, extend some week. So those week now to some retail traders that do smaller time frame and 15 pips stop loss, you understand all those 15 pips stop loss, it will now wipe all those stop losses and then the market will now reverse and then go to its initial direction. So it's something that is very, very important, all right, that we need to be very, very conscious of it so that we won't fall into a whole lot of trap. As of, I think, yesterday, I think I got one trade that did me that. So sometimes it happens. So it's not something you can panic, but at least you have the idea of what is going on. All right. So this will really help us to know exactly what we are doing. And we are back to the charts. So let me explain this. I don't know if I should use an arrow or something. Okay, I should pick a drawing too. All right. This is GBP USD. You guys know I'm a fan of GBP. So this is GBP USD. Okay, with this current price action, all right, you will always have order block. All right. So there's an order block. Some of them happens in this was an order block. Okay. So this is what we call liquidity. A market travels. Okay, let me pick this. Market the way to this point, create a retracement, going up again, create another serious retracement. Okay. Now there's a liquidity sitting here, this particular place. All right. So for this market to continue going down, all right, or there are so many orders at this 1.34288. All right, this particular place, there's order. Okay, so this is where the value of the market is. So for it to sell again, for the market to sell, you need to pick all the orders you have here, all right, to this point. So this particular point now become the liquidity zone. So when market got to this point, all the buy order, okay, has been bought back. Okay, all the buy order, they sell it back, and then when all the buy order here has been executed, so the sell orders will now peak. That is why you have this drastic movement downward. All right. So as the movement is coming down, the selling pressure have reduced. So buyers pick it up from this other block here. All right. And take it up again. So immediately it got to this same 342 3 point 1.34288. All right. Then sellers pick up. There's another set of liquidity, like there's another set of bulk orders here. All right. Then it drops back. So that is how liquidity is formed. So there's something they call liquidity grab. Okay. That's why I don't trade a buy stop or a sell stop, like just place order in a certain place. I believe that there's going to be a reversal from there. It is fine. There might be a reversal from there, but I tend to actually wait and see the reaction of that my zone before I get into trade. So I don't just place a buy limit or a sell limit and keep. I don't do that. All right. I wait till the market gets to that point, then I will see reaction from that particular zone. I wait for my entry models. It can be a fair value gap, it can be an order block, it can be an engulfing candle or whatsoever. So I will enter my markets off that. Okay, so I don't just, okay, like here it's a good idea. All right, you just come here and place a sell order. Right? If you place a sell order here, boom, okay, I don't know what would be your stop loss or something. This was a successful trade, right? But there's something they call liquidity grab. So this particular order, all right, might be good, might be okay. You were right, but at some point, market decide to move and go above that place a little bit. Okay, now clear this your stop loss, so you'll be in loss before the market now went to its original direction. It can be a week, it can be anything. Okay, so that's why I love trading high time frame, because it holds more weight. All right. So that is another thing you need to look at. All right. Let me look for another recent example that I can show you. Okay. This is this is GBP All right. Okay. Okay. Fine. I've gotten something very, very nice. Okay. This was typical example of what I just explained. All right. So this was a liquidity at 193.294. Okay. It's very nice. It was a very nice trade. All right. Market came to that point, immediately reject off it. But if you check how many points is it, it's not that much. So maybe you could have still stay on this trade. Okay. Imagine why I put this thing was, I get to this plane and I stop this my target was because I look back and I saw this, so I know there is bound to be a reversal from here. So that was why I stopped this in here. Okay, it was a trend line trade, so I believe it was meant to go upward. Because of some certain law, I have to stop here. Okay, so that, because I know there will be a form of reaction from this zone because of this liquidity here. So that was why I stopped here. So now imagine, okay, according to support and resistance, okay, you are trading off all this thing. Okay, you get into the market here. Let's say you get into the market here. Okay, you are using 50 50 pips SL. Okay, then maybe you target 100, right? 1:2 or something. Okay, something like that. Now see what happened. Market came to that place. Very fine. It's cool. He respects it. Put you in profit. All right. Now, but there are some others. Okay, this market peak at 196.00. So banks always trade off of this kind of numbers. Okay, no decimal. Now, if you look back, okay, there is a sort of order block. Okay, there's a liquidity back from that 19600. So now the market will sell. Okay, so this particular liquidity was valid, but it first of all need to go and pick all this big money. Okay, so let's assume there were a whole lot of billions here. So immediately it just pick those orders. Look at the drop. The drop was massive because he has a whole lot of liquidity to sell. All right, so the market travel all the way from here just to go and pick this order, all right, so that it will sell. So immediately it was selling, the owner of the money took it out of the market and they are good. So now, this, if you are trading this, you were correct on your own, but you have become a trap. Okay, your little money has been taken away for vanishing. So your little money has been taken away. So that is actually what liquidity grab does. Okay, you are correct, but you tend to be grabbed. Okay, you tend to fall into a trap that they now use your stop loss as your stop loss now become liquidity for the market to go to its original direction. So I believe this really explain what is liquidity. Okay. So for a recap, just backtest it. When there is all this big drastic movement, it's always there's no decimal on those number that market reverse from. It's either it's 1.000, 5.000. So there is always the next big where big money you will have in this market will be 1.9800. Okay, there will be nothing like smaller like fractions on top. There will be nothing like that. Okay, so you just look at this and backtest this. This will really help you. Okay, I don't trade liquidity. I don't do smart money concept. All those plenty stuff. It tends to make trading more complicated than what it is. So I try to keep everything simple. All right. I'm just trading a normal price action. All right. It's just what I use to complement the trade before I get into it. So I keep my trade simple. All right. I trade just price action. All right. Movement of the candle. If my what I trade is what candle is telling me. If candle is telling me that it's going up, I'm trading it going up. If the candle says it's going down, I'm trading it going down. I don't trade any other thing other than that. So that is just it. So I believe this video really help you to understand what is liquidity. All right. And then see you in the next episode. Thank you.